Bitcoin just crashed and temporarily dipped below $100,000. And this could be an incredibly emotional event for you. I know it's a crazy thing to think of, somebody talking about Bitcoin crashing below 100,000. A lot of people think that's crazy. A lot of people that are maybe newer to this, or their cost basis is right at the top, they bought, the 125,000. They see this dip and they become very emotional as they have a large portion or their total net worth in this asset. And now they've taken a large haircut on it. I want to show you a tool that I think is useful not for trading, but for building conviction in these times and maybe changing some of your behaviors so your behaviors are not ran by your emotions. Investing via your emotions is how you lose money, lose value over time. And Wall Street and the bigwigs and all the people with all the sophisticated tools are hoping that that is the case, that there are emotional people in the markets that they can take advantage of. You do not want to be one of those people. So I'm going to show you a tool. I'm going to show you how to use it, and I'm going to explain what it is. And we're going to get into that right after I introduce myself. My name is Forrest Hodel. I'm a Bitcoin educator, and I actually do one-on-one coaching sessions for anybody looking for security best practices, anything around Bitcoin, and the answers to questions you might not even know to ask. You can fast track your learning by booking a session with me in the description on my website, pathtobitcoin.xyz. So here we have the chart here, and this is on CoinMarketCap. There's a few other websites as well that have this chart. This one I specifically like because it's overlaid with Bitcoin's price. So this is the crypto fear and greed index. And so right now you can see that we're in fear. We're not in extreme fear, but we are in fear, and neutral is this yellow here. Green is greed, and dark green is extreme greed. So we have this chart, and basically we can correlate what Bitcoin's price is at the times where this indicator is showing either greed or fear. And I think what's interesting about this tool is you can connect it to your own emotions. So if you start feeling very euphoric about the price, that is actually you feeling very greedy about it. And you need to then go and check, okay, how does everybody else feel about this? How does this indicator indicate that the market is feeling? If it's the same way, then maybe I need to chill out. Maybe I need to feel the opposite. And vice versa for when you're feeling really down about your position, when you feel really negative about it, you might want to check this index. And if everybody else is also feeling fearful, then maybe you can realize that there's a potential for a buying opportunity here. The saying from Warren Buffett is be fearful when others are greedy and be greedy when others are fearful. And there's a lot of evidence here, which I'm actually going to show on this chart, for why that should be the case. So the index is out of 100. In August of 2023, we have the index as 35. So that is in orange, that is in fear. And you can see that is after a dip here. So the index went from 49, which is neutral, to 37 or 34 in a couple of days. And the price went from $29,000 per Bitcoin to $26,000. So $4,000 off, more than 10%, and essentially a massive drop, right? Maybe an unrealistic drop in the fear and greed index. You can see that this index is incredibly volatile. It moves very sharply. It moves much more sharply than Bitcoin does. And you can see here, Bitcoin going from 27,000 to 33,000, the greed skyrockets. It goes from a low here of 40 to 71 within a few days. And then when we have this peak here, you can see it also corresponds with a peak in Bitcoin's price. And then there's sort of this sideways action, and the fear and greed goes to neutral. There's a drop in Bitcoin's price from a high of 46 to 39, so $7,000 off. And the fear and greed index collapses. Doesn't go into fear territory. So if you were to trade using this index, right, if you're simply just buying when you're in fear and selling when you're in greed, this sideways action here will have you selling right into here, and we're not going back into fear. And so you're not adding to your position. So this isn't necessarily a be-all, end-all tool for those trading in their full position size. This should be an indicator to stop yourself from trading in my eyes. Overall, you can see that at any time, basically at any position, you will, and this goes for a 4-year period with Bitcoin's history, if you buy Bitcoin at the extreme greed of this position right here, you will have bought at $71,000 Bitcoin price, and you're up on your position. So this isn't to say you should be selling at your extreme greed and buying at the extreme fear. If you do that, you're likely going to miss out, because over time, Bitcoin is up and to the right. And any 4-year period, again, buying at the extreme greed, even within those 4-year periods, or at the local, or at the highs, you're still going to be up in a 4-year period, because Bitcoin is absolute scarcity and in its adoption cycle. So this shouldn't necessarily be a trading tool where you're going to be selling your position at these spots. And if you do, right, you're a trader and you're going to be making mistakes. What this is showing, however, is there's the possibility of, if you had to sell Bitcoin, right, if you're on the Bitcoin standard, it might not make sense to make a big purchase in your life when you have to sell your Bitcoin to purchase something, not to trade, but to get fiat to buy something. Might not make sense to do that if Bitcoin is showing extreme fear, right? Or even lots of fear. You might want to wait, which is inevitable, a couple weeks, maybe a month, a couple months possibly, for another greed index indication that we're up higher, and you could trim off to fund your lifestyle in that way. Now, the other thing, of course, is I think this indicator is much better for buying than it is for selling. So at any point here, right, basically any point, as far as I can see, you are in a very good position if you bought during fear and extreme fear. We have 2 spots here of extreme fear. So this was in not that long ago, right? In March, January, February, March and April. And basically, Bitcoin's price is 78,000 and 79,000 here. And you could ride it up, and and those were incredible buying opportunities. People are complaining right now about Bitcoin just being above 100,000. But if you bought during these extreme fear times, you're still up, you're still doing great, and you timed that perfectly. So anytime this dips below neutral, if you have extra fiat on the side, you could even do sort of a double dip strategy where you're buying consistently your dollar cost averaging, and you have a little bit of fiat savings or something like that. Like, that's what I would consider doing with this. And when we're dipping into extreme fear, that's when you're double dipping your dollar cost average. That's when you're doing a lump sum. And then you get to appreciate on the extreme greed and the neutral, right? You go back to neutral. There's sort of just this concept of neutral being the base layer with this indicator, and anytime you're in extreme greed, there's sort of a magnet, or the elasticity wants to go back to its natural state of neutral. So it's going to come back to neutral sometime. That doesn't necessarily mean that the price is going to come back down to where it was during the last neutral phase of this index. It can just mean that the market enthusiasm has dwindled. That could mean that we're in a sideways market and the index is just creeping back. But there's sort of this magnetism from the upside to the middle and from the downside to the middle. So if you're buying during the indication of fear, it's likely that it's going to creep back up to neutral. And so I think that this is a great indicator for buying larger amounts if you have fiat. If you're dollar cost averaging and it's just from your paycheck, it is what it is. But there's those certain situations where you might be selling a house, selling a company, selling stocks or something like that, where you come into extra amount of fiat and you want to allocate to Bitcoin. And I think this indicator is perfect for that, in my opinion. Now, what is this designed off of? Let's look at each one of these, how this index is calculated, to explain how this is works so well for showing local bottoms and local tops, essentially. The number one here, price momentum. This factor analyzes the price performance of the top 10 cryptocurrencies by market capitalization, excluding stablecoins. So by market capitalization. So predominantly, that's going to be Bitcoin. Bitcoin is around 60% market dominance right now. So a lot of this is indicated by the price performance of Bitcoin and broader crypto. It assesses how these coins are performing relative to each other and the broader market. So it connects them to how they're doing versus each other, how much price momentum there is within the market cap of crypto, and how it connects out to the broader market. Now, I don't exactly know what's in that specifically. Is it just S&P? Is it QQQ? Does it include bonds, gold? Not 100% sure. Number two here, volatility. This index incorporates Volmex implied volatility indices for Bitcoin and Ethereum, which provide forward-looking measures of expected volatility over the next 30 days. So these are indices that predict future volatility of Bitcoin and ETH, which are the two largest of the cryptos that are in this index. And so this is sort of a forward-looking metric based on current volatility, past volatility projected into the future. Number three, derivatives market. The index considers the put-call ratio in the Bitcoin and ETH options market. A higher ratio of puts to calls indicates more fear in the market, suggesting bearish expectations among investors. So some people with options are going to buy more puts when they expect a bearish outcome. So this is what essentially the VIX also, this is a volatility index, is built off of, is puts on the SPY, the S&P 500 index. And so this is essentially that, but for Bitcoin and ETH. And so when there's when the market is anticipating a downturn, and this often happens when there already has been a downturn, is when people will apply more hedges to offset potential momentum of continued positioning in that way, or they're taking their hedges off, they're selling their puts, they're allowing those to expire when there's momentum to the upside. Number four, market composition. This component looks at the relative value of Bitcoin in the market using the stablecoin supply ratio to measure the ratio between Bitcoin's market capitalization and that of major stablecoins. So this is a ratio between Bitcoin and the amount of stablecoins in the market. There has been people talking about this idea that as stablecoin issuance grows, this affects Bitcoin, because Bitcoin and say USDT, they're the most liquid trading partner. So sort of more people are trading back and forth between these when there's more of it being issued. How much that plays into this, again, we're on number 4 out of the 5 here of the how it's calculated. So my opinion, and this is an assumption, I don't know, have the ins and outs of this, but I'm guessing that this is sort of in order of how much is being, how much this is being weighted for the index. I don't know how accurate this measurement is with the stable coins versus Bitcoin. There's maybe some manipulation within there. There's more, maybe a decoupling happening. There's a lot more stable coin issuance that is outside of the Bitcoin trading pair now, that it's being adopted by, sort of being a digital dollar in the developing world. And there's this Genius Act and in the US that is pushing for more stablecoin adoption and things. I think this metric should be weighted pretty low personally. I think that this is something that will become less and less relevant and sort of have more and more decoupling from Bitcoin's value to the stablecoin supply ratio. CMC proprietary data. This index also uses social trend keyword searches and user engagement metrics to capture market sentiment, retail interest, and emerging trends. This is really interesting because this is an index that tracks sentiment. This is an index that tracks it based on the price movements of all these things and the other things here. But to really sum up the sentiment of the market is very difficult to do. and to actually take in the data of what people are searching. Are they searching how to sell my Bitcoin or how to buy Bitcoin? Are they searching, are they posting on X? Does this capture that? Maybe, right? It says social trend keyword searches and user engagement metrics. I don't know what that entails, but this is exactly what this is meant for in my estimation. When you go on X, when you go on Nostr and you see people bull posting Bitcoin, if you correspond and check on this index, it's likely going to be in greed. If you see people talking about why is Bitcoin's price going down, oh, there's OGs selling, all this kind of stuff about trying to explain the price going to the downside, if you check this index, it's going to be into fear, right? And so it's very easy to get wrapped up in your echo chamber, watching YouTube videos, following all the Bitcoiners and everything, and getting wrapped up into the emotions of things. There's going to be people that are trying to play your emotions off of you and try to convince you to do something else with your wealth. And when you sell your Bitcoin, you are no longer in that position, and you are now in the wind of what the market ends up doing. And most likely, the market is going to go up. And if you haven't repositioned yourself, you will miss out on that. So you do not want to be out of your position without a very good reason. I think the best reason to be out of a Bitcoin position is that you have an expense and you're living on a Bitcoin standard. Personally, I live as allocated as possible. And when fiat comes in, I plan to, in the future now, allocate heavier when I see these fear indexes down. This will be an indicator that I use going forward to double down on my positions buying. And I'm not going to be using this to sell because I'm selling into fiat and I'm now risking the sort of sideways action back to neutral and never actually going into the fear to indicate that I should buy again. So to me, it doesn't make sense necessarily to use this for selling or for trading, especially not only. And again, you're using this against much more sophisticated traders, and 90+% of traders end up actually being less profitable than if you were just to buy, say, an index, an S&P 500 index, which is crazy. So likely you're going to be less profitable than if you were to just buy Bitcoin, right? And to me, this is a way of just knowing when to double down on buying. That's what I see this indicator being incredibly useful for, and that's what I plan to use it into the future. So hopefully this video was helpful for you. I will link this website in the description. If you guys have any more things to add, you can do so in the comment section. And again, you can book me for a one-on-one session. That's in the description, as well as every other thing that you need as a Bitcoiner. There's the cold card, there's Bitcoin Well, there's Start9 to run your own node, there's Stampseed to preserve your seed phrase into the future. All of those things have discount links or bonus points for signing up, and it all goes to support this show as well. Thanks everyone for watching, and we'll see you on the next episode of Bitcoin, Not Crypto.